Hey everybody, how you doing? This is Byron of Byron Riley CPA, and one of the things I want to talk to you today is about 4 mistakes that small S corps and partnerships made during tax season. So these are some common mistakes I normally see a lot of really small to micro-sized businesses make, who take the formation of S corp or either their partnerships. And so let's get started here. I want to share a screen with you. All right, and so hopefully you can see that. Um, And so, 4 mistakes that we see a lot of uh, small S corps and partnerships make during tax season. And the first one would be ask a lot of them, do you know the filing date? Do you know the filing date for the partnership or the S corp? And most people think that date is actually April 15th, but actually it's not. That date is March 15th. All right. And so those returns are due before the actual dates for the personal returns. Now, the question is, what happens if you miss that filing date? And this is where the first mistake happens, filing a late return. And we're not talking about most returns I come across that file, monthly. I've seen them as much as 1 or 2 years late, because they think there's no activity, they don't have to file it. And so let's talk about what that looks like when you miss the filing date. As you can see here, there's late filing penalties. All right, so the late filing penalty can be quite expensive. For a partnership return, that's $210 per month per partner. So let me say that again. That's $210 per month per partner, and that should go up to about 12 months. So that can max out pretty fast and be quite expensive. For S corp return, it's $200 per month per partner plus 5% of any unpaid tax, up to a maximum of 25% of any unpaid tax for any unpaid tax. All right. So once again, it can be quite expensive for not filing a S corp or partnership return on time. All right. Also, in addition to the partners being taxed, you can also receive a tax for issuing the K1s late. So automatically, if you file late, the K1s are issued late. So it's almost, that's an additional $270 to $540 for late issuance of K1s. All right. So that can be, once again, you're almost talking about $400 to $500 per month in penalties right there. In addition, you're going to start accumulating interest. So late filing can be very expensive for S corp and partnerships. So you definitely want to make sure you don't miss the March 15th deadline. If you're going to miss the deadline, make sure you file an extension. All right, and that'll give you till September. Now let me say this here about extensions. If you miss an extension deadline, just because you file an extension doesn't necessarily mean you won't receive the late penalties. If you miss the late deadline, you will receive the penalties, and they will go all the way back until the deadline date of March that was missed. It does not go back into the date of the extension. Remember, that was an extension. You were required to file by March, and so if you missed the extension deadline, those penalties, the $200 a month, the $210 a month, will go all the way back starting in April. All right, so keep that in mind when you file a late S corp or partnership return. All right, so next up, what's number 2? Do you have to file a return if you have zero income? And the answer to that is yes, you do. All right. Unlike a 1040, if you don't have any income, you really don't have to file a return. However, for S corp and for a partnership return, that's not true. If you have zero income, you still have to file a zero return. If you don't file the zero return, you still are subject to the penalties that we just went over. All right. So it's important to remember that, because I've seen so many people have zero returns. They think because they started returning, they started the S corp or the partnership in 1 year, didn't start having activities of business the following year, and they will automatically think because they didn't have an income, they didn't have to file. Well, the fact that you didn't file, also now you're accumulating those late filing penalties for the K1s, as well as for you personally as a partner any traditional member or partner of the S Corp or partnership. So keep that in mind. Number 3, can you file your personal return before filing your S Corp partnership return? Think about that. Can you file your personal return before you file your S Corp or partnership return? And the answer to that is no. All right. You don't want to file your personal return until the S Corp or partnership return has been prepared and filed. That way you have the K1. The K1 needs to go with your personal return. If you're dealing with, let's say if there's income in the S Corp or partnership, even though it's late being prepared, if you don't have that on your personal return, you could be subject to underreporting penalty. All right, because now you have income that you're not claiming. All right, so it's just important to have your K1s timely, and it's important to make sure you have your K1s when it comes to file your personal return. Sometimes people think, well, I'll get my books together on the S Corp return, but I'm gonna go ahead and file my personal return. I need to get that file. Well, you don't want to do that, because now you just created another challenge. You have to come back and file amendment because you have unclaimed income or losses. So yeah, you want to file your personal return after you receive your K1s from your partnership and personal return. What's the 4th one? All right, this is one I've seen quite often. A lot of people will have a small business, and one of the first things they want to do is take an S Corp election. Well, you just can't automatically assume you're S Corp. You just can't say I'm an S Corp. All right, there's a form that has to be filed. It's called a Form 2553. All right, and that form has to be prepared. And once it's filed with the IRS, normally within about 60 days, you should receive what we call an approval letter. All right, and this is the letter right here. Matter of fact, it's Form CP 261. All right, and so normally if I'm preparing your return, I'll ask you for this form. I've seen many people, many business owners assume or think they have an S Corp election, and they don't, because they have not filed the Form 2553, or maybe the form was filed and was rejected, and then they hadn't received the approval letter. All right. So in order to make sure that you have S Corp status, you need this approval letter. All right. If not, you should be calling IRS and find out what happened to your letter. Now, what's the consequence of not receiving this letter and you file an S Corp return? Well, if you send an S Corp return in, you're not an S Corp return, IRS won't do anything with that return. All right. So now you create another problem. So let's say if you're a retailer and you thought you had an S Corp election and you received income maybe through a merchant account. So now you have unreported income on your personal return. And so now you're going to be subject to penalties, underreporting penalties, failure to file penalties. And so that should have reported on your Schedule C because you don't have the S Corp election. So it's very important to make sure that you file the Form 2553 and get the approval, get the copy of this approval letter back, and you keep for your records provided to your CPA that you have received the S Corp status. All right. So these are just a few common mistakes I've seen that small S Corps make during tax season. And so these are definitely things you want to make sure that you have in place. Get your return filed on time. Get your K1s out. Make sure you have. If this is your first year in business, make sure you have your approval letter from IRS for your S Corp. All right. And so if you have any questions or if you're looking for a CPA specialized working with small business owners, feel free to reach out to me. You can reach me at Byron at ByronRileyCPA.com. That's my phone number, 832-303-3995. I'm on LinkedIn, Facebook, Instagram. Feel free to connect with me, excuse me, on LinkedIn. I look forward to talking to you. Have a great day. Bye-bye.